Welcome to the chat. So today we are going to be discussing one of the most vital topics in the forex market, which is order blocks and institutional order flows. Now, the essence of knowing the order flow of the market is that it brings an awareness into the past situation of the market, the current situation of the market, as well as the future situation of the market. And to understand the present, we need to understand the past. Not that the past actually repeats itself in the market. However, what happens in the present and the future rhymes with the occurrence of the past. The reason why, in my opinion, I conclude that the past does not repeat itself is that a setup does not repeat itself exactly alike in a perfect manner. Nevertheless, if all variables are brought into play and all constants, the market rhymes just the way it has occurred in the past. So now, firstly, we need to keep in mind that the market is solely controlled by the dominant market participants. Who are the dominant market participants? These are the central banks and large financial institutions, because they are ever present in the market. The retail trader, once his take profit is hit, he leaves the market. The retail trader, he has the days that he trades in the market. For instance, over 80% of professional traders only trade during the middle of the week, if not 90%. I mean retail traders. But the central banks, the large financial institutions, they are always in the market. From Mondays till the weekends, they are the ones that have their money in the cryptocurrencies, in the stock market. So they must always be in the market, because forex trading is what it is, their only business. Like, they have the money there, they control the money there, they decide who makes a profit and they decide who goes home with a loss. They decide whose account gets blown and they decide whose account gets flipped. So now, as traders, we can only do one thing to be successful in this market, and that is to ride on the coattail of these dominant market participants. Because once you ride on their coattail, I can bet you have no choice than to be profitable in this market. And all traders have one thing in common. Dominant market participants and non-dominant market participants, we all have one thing in common, and that is greed. And it is this greed that has brought us all here together today. Because if you are not greedy, if you are satisfied with what you make, I don't think you should be looking for an alternative source of income. I don't think you should be looking for so much money, because this market, it would give you so much money. So if you are not the greedy type, I don't see what you are doing in the market. Every trader is greedy. All traders are greedy. The only thing that separates traders is that traders that are smart, they are greedy when others are fearful. Traders that are smart, they are fearful when others are greedy. But traders that are lacking in wisdom, they are what? They are overconfident when others are fearful. They are overconfident and greedy when others are fearful. And what? And they are fearful when others are confident. So those are the differences. And if the market maker is not greedy, I don't think he would be pumping price up. Neither will he be pumping price down. Neither will he be able to create order in this market, because the market is a chaotic environment, and part of the role of the market maker is to create order in this chaos. And the candlesticks you see right here in the chart, that is the language of the market. Understanding these candlesticks in depth, then you know when the market maker is trying to create chaos. At the same time, you will know when the market maker is trying to create order. And as professional traders, we only want to be in the market when order is being created. Whenever there is chaos, we want to try as much as possible to stay away from the market. So, understanding the institutional order flow, you are going to have an insight into when the market maker is creating order, as well as when the market maker is creating chaos. As the common saying goes, the bulls make money, the bears make money, and the hogs get slaughtered. What this means is traders that have structure, that are greedy when others are fearful, that trades with wisdom, either as a bull or a bear. In other words, either as a buyer or a seller, they make money. But the traders who are very greedy, who always want to get out of the market more than the market can give, they are often slaughtered. Let us take less than a minute to explain the candlesticks we have right here for the sake of beginners, so they have an insight into what we are doing here today. As you can see, price rallying up, creating series of higher highs, lower highs, higher highs, lower highs, with a cluster of green candles. These green candles, they signal buying pressure in the market. These green candles, they are telling us that the buyers are present, and they are what? They are putting pressure on price, driving price higher. While here, as you can see, price accumulating here with a cluster of white candles. These white candles, they signal selling pressure. So they are telling us that the sellers are attempting to push price down, and they are putting pressure on price. While a candle that has neither color, that is neither white nor green, a candle that has neither color, that's neither white nor green. Let us take an example so we see. Like this candle that has neither color, it is not white or green. This candle, it signifies indecision in the market. So back to our discussion. To know the order flow of the market, it is best that we go to the monthly time frame. This will give us a perspective into the year as well as the past years. And firstly, we need to understand the concept of market structure. And I believe if you are an experienced trader, you should know what market structure means, as this is the structure of price. Because price does two things: either price is trending or price is ranging. What we mean by trending is either price is moving up in an impulsive manner, as you can see price moving up with series clusters of green candles, or you see price moving up and down with weak momentum, like we have here. We have a weak momentum here. So this is a ranging market, while this is a trending market. So to have a perspective into the institutional order flow, the first thing we want to see is a trending market on the monthly time frame. And coming to the monthly time frame here, we can see on gold, we can see a strong uptrend, price creating a higher high, lower high, higher high, lower high, higher high. So seeing this, we have our first confirmation. Seeing this, we have what? We have our first confirmation. And the second confirmation we want to see to confirm a healthy order flow is we want to see other blocks being respected. We want to see other blocks being retested and respected. Mind you, if you see a trend and the other blocks are not being retested and respected, we are not having a good order flow. We are not having a healthy order flow. So the next question is, what is an order block? An order block, these are zones where institutions put their order, and once price comes to these zones, price must react. How does price react in this zone? Price respects these zones and move in the intended direction. We are going to be only looking at two other blocks, which is the engulfing pattern and the breaker block. As you can see here, we can see selling pressure, buying pressure, buying pressure. This is a breaker block, and as you can see here, you can see selling pressure, buying pressure. So once we see these two, these are the other blocks we are looking out for. So as you can see here, you can see price retested and went up. Right here after this formed, price went up. You can see right here after this formed, price retested and respected it. You can see here after this formed, price retested and respected it to the upside. And you can see here as well, when price formed this selling pressure and this buying pressure overpowering the sellers, you can see price retested it and respected it to the upside. So seeing this on the monthly, since last year, since 2019, 2020, 2021, 2022, 2023, 2024, so we have each year in these columns. So seeing that in the past 1, 2, 3, 4, 5, 6, since the past 6 years, we can see that gold has been what it has been in a bullish order flow. So seeing this, we know that the long-term players, the big players in the market, because I can bet you there are some institutions that bought gold in this level and they are probably taking their profits here. So they are present in the market and we can see their strong presence, so we can conclude that the order flow is bullish. Then let us go to the weekly, so we can see the present order flow. And now coming to the weekly, what do we see here? We also see an amazing structure. This is beauty right here. You can see a high, lower high, higher high. Price respected this order block, and let us look out for other blocks being respected. You can see this other block that formed as well. Price respected it. So seeing the reaction of price and how price respects this order block, it gives us a stronger confirmation that the order flow is bullish. So if you are going to be taking any trade on the lower time frame, either on the weekly, on the 1 hour, or as a scalper, you want to look out for trades to the upside. Why? Because the order flow is bullish. And as you know, this year gold is in an all-time high, so it is that simple. It is what? It is that simple. Let us go to another pair and look out for the order flow. Let us go to BTC USD. So now on Bitcoin US dollar, now we are on the monthly chart. And let us see, as we have known the market structure before, we can see we have a high, a lower high, a higher high, a lower high, a higher high. So what we can see here, we can see that what we can see that the trend is to the upside, which is the first confirmation. So what is the second confirmation? We want to look at bullish order blocks and how they are respected. Here we have a bullish order block. We can see selling pressure, buying pressure, and price retest. You can see how price respected this. Right here we can see selling pressure, buying pressure, and we can see how price respected this as well. Mind you, if price is not respecting this order block, it does not give us a strong confirmation. So right here we have an order block here as well, and let's just mark it, and maybe in the coming weeks, the coming months, if price retraces here, we'll see how price behaves. Either price is going to respect this level or not. So now let's go to the weekly. On the weekly, we can also see bullish candlesticks. You can see bullish order blocks and how price respects them. Because if price are not respecting the bullish candlesticks, then it means that the order flow is weak. So yeah, if you want to be taking any trade, either on the weekly, on the monthly, on the daily, you can see you just need to know that you are going to be taking trades to the upside. Let's go to gold. Let's go to the 15 minutes and see other blocks to the upside and how price behaves. So on gold, merely confirming the order flow. So just coming to the 15 minutes, you can mark as many bullish order blocks as you want. In conjunction with other technicals, you are going to see price is likely going to respect them and align, because the order flow on the longer term is bullish. So as a trader, you are going to be at greater advantage following the long term order flow. You can see them here. So you can see price retested this sell candle, it came back here, formed a buy pattern, and you can see price rallied up. So the bigger picture, the order on the bigger picture is always going to prevail, is always going to supersede whatever happens on the lower time frame. So you need to keep this fact in mind. You just want to look for patterns to the upside and follow in the direction. It will not be much of a wise decision going against the order flow of the longer term. So you can see, so that's just for gold. Let's go back to BTC USD. So BTC USD on the 15 minutes, most of the patterns to the upside are probably going to go in plan. You can see this pattern and this critical result, selling pressure, buying pressure. You can see price respected and went up. Let's go to the 1 hour. So you can see this we marked on the 15 minutes, and you can see this price going up because the order flow is to the upside. So you can even see on the 4 hours, when price came to retest this zone, price is most likely going to react at this level. Here we have this order block. Let's see, price is most likely going to react, come retest here, even if it will drop later. So let's go and take a look at other pairs. Let's look at the DXY on the monthly. This is the dollar index. This gives an insight into the US dollar pairs. So on the monthly, what do we have? So as you can see, the dollar index for the past 2 years, it has been in a range. So once you see a range like this is 2024, 2023. Once you see a range like this, you need to know that you have to be careful. Nevertheless, the order flow is still to the upside, but you have to be very careful. So what do we do when we see this? Then we go to the daily. So coming to the daily, we can see that the past 4 months, the order flow has been to the downside. However, the signal on the daily is not as strong as that of the monthly. So we can see the order flows to the downside, and let us look out our bearish blocks being respected. That's the second rule. You can already see a downtrend, a lower low, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low. So now we have bearish blocks. This particular bearish block was not respected. This was not respected as well. This bearish block was not respected as well. You can see price came to break it before price dropped. So this does not signal that we have a very healthy order flow to the downside because we have just one significant block being respected. So in this instance, we can scale lower to the 4 hour. You can see the 4 hour, the order flow is to the downside. So following from this, we do not have a very strong order flow, so we are still going to stick to the uptrend because right here we have a lower high, a higher high. So probably price is coming from a retest. So seeing this, you can see that this order flow is not as strong as the ones we saw on BTC USD or gold. So now I hope you are able to distinguish a healthy order flow from one that is not so healthy, like this on DXY. So you need to be able to you can see on the Canadian dollar as well, not much of a healthy order flow. You can see this period we had a healthy order flow, but these years we have been having some accumulations and we want a healthy order flow. That's what we want to see. See on silver, you can see the order flow to the upside. So most of the time we want to see healthy order flows. So a healthy order flow, the past 2 months has to be trending. You can see the past 2 years or 3 years, you can see this year was trending, this year was trending, this year was trending, this as well, this year is trending, this year was trending. So but you can see that on USD CNH, this is not a healthy order flow. So a lot of things need to be put into perspective. Let's look at the Bitcoin Cash US dollar. Let's look at the order flow. You can see we have a choppy order flow. So from this, I hope you know how to look out for the order flow and the longer term direction of the market. If you are able to do this successfully, a lot of your trades are probably going to be take profits back to back. You can see GBPUSD on monthly, the order flow is not so strong, and we want a strong order flow. That's what we want to see. We want to see a very strong order flow. So as always, plan your trade your plan, and most importantly, always manage your risk and emotions. If you find this useful, like, share, subscribe, and we are going to be giving you more educational content like this. So this is a very, very simplified way to look out for the order flow. Let's just take a look at some other pairs. Okay, Euro USD, and we have Euro USD already. Let's look at the monthly. You can see this order flow is not so strong. So go to the chart on your own, mark out order flows, look out for the other blocks if they are being respected, and do what is necessary and what you must do.